Hello, friends. Today we're taking a look at Mastercard, ticker symbol MA. This is a company that a lot of investors love, and we'll see why. And just as a disclosure, I own this company too. And as a disclaimer, I'm doing this video for educational purposes. I am not a professional investor. I am not a financial advisor. And if any comments that I make over here, please take them as just as my opinions and not a recommendation to buy, sell, or hold these security. So I encourage you to do your own research. However, I would love to hear your opinions, just like you're listening to my opinions. I would love to hear your opinions, whether you're bullish about this company or you're bearish about this company. If there's something that I miss from my analysis, I would love to hear from you in the comments below. And since you're down there, you can also subscribe to the channel and leave a like or a dislike. Just let me know. Analysts are expecting this company to continue to grow to at least $450 in the next 12 months, which is a possible run of another 8.6%. This is a company that, as we look at the financials, you'll see why it normally tends to be oversold. Overpriced. A lot of people love to own this company. So there's a lot of demand. As you can see, the PE ratio is at 36%, which is higher for most companies that people tend to buy at 20%, 20 PE. So in the last 5 days, it has gone up about almost 1%. In the last month, it has grown almost to almost 9%. Year to date is up 18.4%. In the last 5 years, an amazing 123%, which if you compare with Visa, which I made a video about it, I think Visa was in the 90s. So this is almost 30% higher than what Visa has returned. So it also pays a dividend of $2.28, which is about a 0.55% of the current price. They reported earnings not too long ago on October 26. Their earnings they beat on earnings by 18 cents on the normalized, and they also beat in revenue by a little bit, but they beat for almost $6 million. For those that don't know what Mastercard does, Mastercard is a company just like Visa that processes transactions using their own networks, and for each transaction they charge a fee, normally in percentages and maybe a couple cents, and that's where they make most of their money. So let's jump into the financials. In the past 10 years, their revenue has grown 12.6% year over year, and in the last 10 years, it has been growing about 14.2%, which is amazing. When it comes to earnings, they are growing about 15.4% in the last 5 years and above 60% in the last 10 years. Their profit margin is really nice at almost 45%. This means for every $100 of revenue that they make, they keep around $45 for net income. This is a little lower than Visa for those that like to compare the two companies, but it's very good. When it comes to Mastercard, their free cash flow has been growing about a 13.6% in the last 5 years and about a 12.6% in the last 10 years. And their free cash flow is similar to their earnings at 44%. Book value has been staying steady in the last 10 years. It's pretty much flat. And in the last 5 years, it has grown at 5.31. Return of invested equity It's an amazing number of 130. This is the average of the last 5 year return on equity. When it comes to return on assets, it's about a 25%, and return on investment capital is 50.5%. These are amazing numbers, and this is part of the reason why Mastercard and Visa are beloved by investors, because they're cash machine. When it comes to dividends, the dividend has been growing in the last 5 years about 17% every year. And in the last 10 years, an average of 26.4%. So that's part of big reason why a lot of dividend investors love this company. Because how many of you get 26% or a 17% raise every single year? That's pretty nice. When it comes to debt has been growing. I don't have a number in the last, because they didn't have any debt on 2013. But in the last 5 years, have been growing at 22%, which is high. But the thing about them is that they can pay their long-term debt in less than 2 years using their free cash flow. The average free cash flow that they get, they can pay it in less than 2 years. When it comes to shares, they have been buying back about 2 to 2.5% every year, which is great. So whenever we look at the last 5 year analysis of how they have been growing, these are the numbers, and numbers are amazing. Analysts, I can't believe this. I have a little bit of hard time believing this, but what analysts are projecting is that in the next 5 years, Mastercard will grow almost 21% every year, which is an amazing number. It's outside of their regular growth, but I will highly encourage you to be looking and seeing why that's happening. I'm probably going to use somewhere close to more of their historical numbers, somewhere around 13.5%. Whenever we look at the multiple valuations, just like Visa, I am going to be doing something different from the regular videos that I do. Is I am going to be using the last 5 years multiples. So this is the last 5 years medium multiple of in order to do the valuation. And the reason is because as they continue to grow and as they have so much love by the investors, people are willing to pay more. So the average on the 5 year multiple in the last 5 years is way higher than the last, if you take the last 10 years as a medium. For those that don't know, historical multiple valuation, it really is, it looks at what the market has been willing to pay in the last 5 years. So if they were to pay the same amount, what would be the fair value? So average, if you would take the average of their multiple of their per share values, that would be about $325. And if we look at the trailing 12 months, that would be $403. When we use the payback valuation, growing it at 13%, we have a fair value of the last trailing 12 months of $485. But if we use the average, it will be $380. Whenever we look at the discounted earning valuation, the growing it at 16%, which is closer to the 10 or 15 year average, paying at 37 average PE. The average fair value in the market, it will be using the average EPS will be $325, while using the trailing 12 months will be $443. I am not going to be using the earnings, the owner's earnings valuation, because it's not really good for a company like Mastercard. Here are the numbers if you want to look at them. So whenever we put all the numbers and the fair value, just like explained in the video before. These are the numbers that we have. So it's 333 in the average, or a trailing $420. I am not going to be using the 5-year average, or the average between those two numbers. The reason is because of the type of growth that they're experiencing. It doesn't go up and down, it just keeps growing. So the average really brings that average down. So I'm going to be using the trailing 12 months. I am confident on their moat. I'm confident on this company, but I'm going to leave it there for you guys to see in case you disagree with me and you want to see the numbers. I personally, when I was doing the calculations, I took a 10% margin of safety because of the moat, because they're an amazing company. I feel confident. And the number that I came up was $378, and that's about what I pay. I paid $380 for it. So on average, so those are my thoughts when it comes to this. If you have any questions or comments, please let me know. Write them down there. If you like and you find value in this, please subscribe and leave a like, and I'll see you in the next video. Thank you.